Which is the best growth stock to buy, Teladoc Health or Fiverr International? I'm going to answer that question in this video, comparing the two growth stocks across four financial metrics, starting with quarterly revenue growth. So let's begin. According to this metric, Teladoc is growing faster than Fiverr International, and that has roughly been the case for the last few years. Teladoc, of course, exploding during the earlier stages of the pandemic when folks were looking to avoid visiting doctors' offices and preferred to have virtual visits whenever possible. And of course, that favors Teladoc Health. Um, Fiverr International also benefited during the pandemic when many more professionals were working from home and choosing to work from home instead of going out and working in the areas where you have jobs that are consumer facing because they did not want to spend that much time close to people where they could potentially get infected with a potentially deadly disease. So both of these stocks were beneficiaries of the pandemic. Now coming out of it, their revenue growth has slowed down considerably, although they are still expected to grow robustly over the next several years. Another thing I like to look at when I'm comparing growth stocks is their operating profit margin. Now, I understand that growth stocks will have negative profits. I'm okay with that as long as I see some progress towards profitability. I want to see steps towards profits. I don't like to see these growth companies that have revenue going like this and then they have profit margins going the other way down. All right. So, thankfully, we don't see this with either of these two stocks. Teladoc, you could see, one big dip relating to an acquisition, most primarily, and then the rebound from the pandemic reopening. But overall, if you look back here and you draw a line, you see nice upward growth in the operating profit margin. Uh, Fiverr shows a more impressive slope in terms of improving its operating profit margin from negative 45% to negative 13.9%. So each of these two growth stocks are showing progress towards profitability, which I like to see when I'm looking at growth stocks. The next thing I like to look at is cash flow from operations to sales over the trailing 12 months because many times these growth stocks will have a meaningful portion of their expenses come from non-cash expenses like depreciation and stock-based compensation. So looking at cash flow from operation kind of strips that out a little bit. Just looks at the company, how they're generating cash flow, because cash flow is even more important when you're a growth company. It's harder for these growth companies to come by cash, right? If they want to go out to borrow, they're going to have to pay higher interest rates and accept less favorable terms than compared to, let's say, an Apple. If Apple wants to go out and borrow billions of dollars, it can do so at a very favorable interest rate. That's not the case for companies like Teladoc and Fiverr International. They have to pay considerably higher interest rates. So for them to generate cash flow from their own operations reduces their cost of capital significantly. So that's important. And again, I like to see this improving even if it's negative. And I do see that from both of these companies, especially Fiverr, showing very pronounced growth in their cash flow from operations, just as they did with their operating income. So revenue growth is really translating into improving profit margins and improving cash flow from operations for each of these companies, but way more so for Fiverr International, as you could see from their slope, which is like this, compared to more flat for Teladoc in terms of their improvement. Finally, I'm going to compare these two on valuation, and I chose to use the forward price to sales ratio. And judging by this metric, Fiverr is nearly twice as expensive as Teladoc, trading at 3.174 price to sales compared to 1.6 for Teladoc. That said, I think Fiverr has earned that premium valuation based on the evidence they've shown in their improving cash flow from operations and improving operating margins on their revenue growth. So, based on that, I think they've earned their premium valuation compared to Teladoc. So, if I'm picking one of these two growth stocks to buy today, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would pick Fiverr International. All right, that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership. And I've selected a couple of videos that I think you'll enjoy. So please click on one of those and I will see you over there.